Does Medicare cover Mounjaro? And unfortunately, the answer is Medicare won't cover Mounjaro for diabetes or for weight loss. There is an alternative way to pay for Mounjaro, which I'll show you here in a second and show you some scenarios that I think you might find very interesting. But first, if you didn't know, Mounjaro is expensive if you're having to pay out of pocket. So according to GoodRx, you're looking at spending between $1,000 and $1,200 a month out of pocket to pay for that prescription. So the question then is, how are you going to pay for it? So we already know Medicare does not cover Mounjaro. There may be Medicare Advantage plans that may cover some or all of the cost of Mounjaro. So I'd recommend reaching out to your Medicare insurance agent to see if there's a plan that would cover it. However, I will tell you it's unlikely that it's going to cover this medication. So where most people are going to end up is paying for it with their retirement savings, which may or may not be a good idea, depending on how much money you have in your retirement plan and what the impact would be of drawing out $1,000 to $1,200 a month to pay for this medication. So you really got to look at what that impact would be, because there are going to be, or they're likely to be, future expenses that you're going to need those retirement savings to pay for, such as future healthcare costs, potential long-term care or in-home care costs, home repairs, things like that, that you're going to need that money for. You could use credit cards. I think that's an absolutely horrible idea, because whacking your credit card $1,000 to $1,200 a month, you're going to bury yourself in debt quite quickly, and living on a fixed income in retirement is just a bad idea. It's a slippery slope you do not want to find yourself on. But like I mentioned, there is an alternative way to pay for Mounjaro, and that is with a reverse mortgage. And there's several ways to use the reverse mortgage to pay for that prescription. And there's also several benefits that could be had with the reverse mortgage as well. So first and foremost, if you owned your home free and clear, you could get the reverse mortgage and use those proceeds to pay for the medication. And if you did that, that in turn could help you retain your retirement savings. So again, you're not drawing down heavily on your retirement savings to pay for Mounjaro. You could also consolidate debt to free up cash flow. So you could pay off or consolidate your mortgage, car payments, credit cards, other debt into the reverse mortgage to then free up the cash flow so that you can pay for it out of pocket. And then there's also the potential to be better prepared for other large expenses during retirement, because again, typically we're either introducing more cash flow or access to more funds with the reverse mortgage, and therefore you can be better prepared for those large expenses if and when they pop up. Again, healthcare costs, home repair, car repairs, all these things that you're going to need your retirement savings for. So let's take a look at the scenario of Diane. She's 65, $4,100 a month of income. She owns her $400,000 home free and clear, and she has $185,000 in retirement savings. Now, Diane is not the typical person that would even think or consider getting a reverse mortgage, but Diane really wants to get on Mounjaro so that she can lose the weight that she's always wanted to lose. Because she's tried everything during her life. She's always struggled with her weight, and she's tried everything, right? She's tried the lotions, the potions, the pills. She's tried Jenny Craig. She's done jazzercise. She's done Zumba. She's done it all, and just nothing ever helps her take off the weight. Now, she could afford $1,000 a month for Mounjaro, but it's going to be tight, and she doesn't really feel comfortable doing that, and she doesn't want to raid her retirement savings in order to pay for the prescription. So Diane reached out to me to see if getting a reverse mortgage might solve this problem and allow her to actually be able to afford comfortably that prescription. So we gave Diane a couple different options. So this is the first option, which was to get the reverse mortgage and draw the money out of the line of credit to pay for her monthly medication. And so that scenario is represented by this bar chart here. The blue represents the home value, assuming a 4% appreciation rate, which historically is pretty accurate. The orange represents the loan balance, and we can see this loan balance is increasing over time. And there's two reasons why this loan balance is increasing. First and foremost, Diane is drawing out $1,000 a month for her Mounjaro prescription. And so we can see that is increasing. So every time she draws out that $1,000, it gets added to that loan balance. The second reason this loan balance is increasing is because we are assuming that Diane is not going to be making a monthly mortgage payment towards the reverse mortgage. She still has to pay her property taxes and her homeowner's insurance, but because she's not making a monthly payment, the interest in mortgage insurance is getting added to the loan balance. And for those two reasons, that's why that line of credit, the loan balance is increasing over time. The green represents the line of credit. And so initially we can see we're starting off with $149,000. And in 15 years, she has $122,000 in the line of credit. So she's drawing this down over time. Now, what's interesting is that over 15 years, Diane would have actually drawn out $180,000 from her line of credit. And she's starting off with a $149,000 line of credit. So the question is, how is that possible? So it's possible because any funds that are available in this line of credit are actually growing at the current interest rate plus 0.5%. So even though she's drawing out $1,000 a month, the remaining funds continue to grow. So she's not drawing dollar for dollar out of her line of credit and drawing that down, which is why she's actually able to draw $180,000 over a 15-year period and still be left over with a $122,000 line of credit, which is pretty awesome. The other option that we came up with was to draw $500 a month from the line of credit and pay cash for the other $500 cost for Mounjaro. So again, the blue represents the home value. Nothing's really changed there. The orange is the loan balance, and we can see that's still growing over time because Diane's still drawing out $500 from the line of credit. And again, we are assuming that she's not making a monthly payment towards the reverse mortgage. She still has to pay her property taxes and homeowner's insurance. What's interesting is this line of credit. Again, we're starting off with $149,000. And in 15 years, that's expected to be $286,000. So even though Diane is drawing $500 a month over time, this line of credit is still growing and is larger in 15 years than what she even started with. Again, that's because any funds in that line of credit are growing at the current interest rate plus 0.5%. So she's actually, in this scenario, drawing less than the growth that's happening in the line of credit, which is why it's growing over time. So in 15 years, she's expected to have $286,000, and that comes at a time when Diane's expenses are probably going to be higher. So higher health care costs. She's likely to be needing assistance at her home, either with a maid service or somebody taking care of the lawn. She may have to pay for a driver to get her to the grocery store, things like that. So again, this can provide an additional source of funds for Diane beyond her retirement savings to be able to deal with those large financial shocks and expenses when they pop up over time. So you just saw with the charts there's lots of reasons to consider getting the reverse mortgage to help pay for Mounjaro. First and foremost is the ability to actually afford this relatively expensive prescription, especially since Medicare won't pay for it if you're using it for weight loss. Secondly, you're not getting into credit card debt, which on a fixed income can be a really slippery slope. And you're also potentially have the ability to retain retirement savings. So instead of spending all your retirement savings for the Mounjaro prescription, Instead, you could use the reverse mortgage proceeds to cover that expense. As you also saw, it creates an additional source of retirement funds with the reverse mortgage line of credit. And that's important beyond just paying for Mounjaro, because there are likely to be other financial shocks that you're going to experience through the rest of your retirement, which could be other healthcare expenses. It could be long-term care expenses. It could be home maintenance, like replacing a roof or a heating and air conditioning unit, and having access to those retirement savings and or the reverse mortgage line of credit can help you deal with those large expenses when they pop up. Obviously, getting the prescription can lead to an improved quality of life through weight loss, and just feel better about yourself and also feel better physically. So you want to see if this would work for you, if it could help you pay for your Mounjaro prescription. Give me a call. Happy to put the numbers together for you, run scenarios, look at different options, answer any questions that you have about reverse mortgages. There's no cost to speak with me. There's no obligation for me to put any of this information together for you. I'm just happy to help in any way that I can. Give me a call, and I look forward to speaking with you. Thanks.